something is happening. The markets are whispering, and all eyes are on one man, Warren Buffett.
The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years.
His recent moves. Is he seeing something we're not? The question everyone's afraid to ask, is a crash coming? And has Buffett already seen the writing on the wall? 2025. It's closer than you think. We'll delve into the shadows examining the evidence, including this unsettling article, Warren Buffett's 2025 market outlook. We'll also be analyzing other key data, searching for answers in the tea leaves of the financial world. One piece of the puzzle, the Shiller PE ratio, a chilling 38.66, far higher than the historical average, a stark reminder of past bubbles, past collapses. Buffett's past caution, they echo in our minds. So, what does it all mean? Are we on the precipice? We're just scratching the surface. There's more to this story, much more. We need to look deeper, beyond the headlines, beyond the surface level analysis. What secrets are hidden in Buffett's recent transactions? What clues can we glean from his past pronouncements? What's driving this sky-high Shiller PE ratio now? Is it just irrational exuberance, like before? Or are there deeper forces at work? Some analysts point to low interest rates. Makes sense, right? Lower rates push investors towards stocks, driving prices up. Others highlight strong corporate earnings, particularly in tech. Innovation, growth, it's exciting, so it's likely a complex mix of factors. Rarely is it ever just one thing. It's not as simple as just saying the market's overvalued and running for the hills. There's always more to the story. So, we've talked Shiller PE. What about the Buffett indicator? Another classic. And it's also flashing red, a record high, isn't it? 206%. That means the market would have to drop significantly. 40% to reach historically fair value. That's a lot, no denying it. We're definitely priced for perfection at the very least, but does that guarantee a crash? Not necessarily. These indicators are warnings, not crystal balls. The market can remain irrational for a long time. So, we have these indicators giving us pause, and on top of that, other risks are brewing. Trade tensions. We'll explore those next. The plot thickens. Trade tensions heating up. Inflation rearing its ugly head. And looming over it all, climate change. A perfect storm brewing? It certainly feels like a lot to keep an eye on. And into this turbulent landscape walks Warren Buffett, the oracle himself. When he makes a move, the world takes notice. So, what's he been up to? For the last 8 quarters, Berkshire Hathaway has been selling more stocks than it's buying, and they're sitting on a mountain of cash, over $325 billion. That's a lot of dry powder. Almost as if he's waiting for something, bracing for impact perhaps, but he hasn't completely retreated. He's been buying certain stocks, Occidental Petroleum for example. So, it's not a sell everything signal, more like a be strategic, be picky vibe. But here's the real head scratcher. He sold his holdings in 2 S&P 500 index funds. Didn't he always say everyone should just buy and hold those? He was the biggest advocate for index fund investing, especially for regular folks, and now he's selling. That's perplexing. What could it mean? What does Buffett know that we don't? It's a puzzle, isn't it? Buffett, the champion of index funds, selling them off. What's he seeing that we're missing? Is this a sign of an impending crash, or is something else going on? Maybe he's simply adjusting his strategy. After all, he's been a vocal critic of high valuations. Perhaps he sees better opportunities elsewhere. Or maybe, just maybe, he's playing a deeper game. Could he be trying to send a message? A warning? Is he deliberately shaking things up to force a correction? It's all speculation, of course. But one thing's for sure. Buffett's moves are never random. He's a master strategist, always thinking several steps ahead. So, what can we do? Should we follow his lead and sell our index funds? That's a decision you'll have to make for yourself. But one thing's clear, we need to pay attention. We need to stay informed. And we need to be prepared for whatever the future holds. The market is a complex beast, and even the Oracle of Omaha can't predict it with certainty. But by analyzing the evidence and staying vigilant, we can navigate the uncertainty and protect our financial future. Buffett's moves, they're not just about individual stocks. They're about a philosophy, a long-term vision. He's not just reacting to the headlines, he's anticipating the future. He's playing a different game, a game of decades, not quarters. He's looking beyond the immediate noise, the daily fluctuations, the fear and the greed that drive so many investors. He's looking for enduring value, companies that will thrive not just next year, but in 10 years, 20 years, even 50 years. And that's the lesson we can learn from him. It's not about trying to time the market. It's about understanding the fundamentals. It's about being patient. It's about having a long-term perspective. Buffett's cash pile is not just a sign of caution. It's a weapon, a tool to be deployed when the opportunity arises. When others are panicking, he'll be ready to pounce. He's not afraid of a market downturn. He embraces it, because that's when the real bargains appear. That's when he can buy great companies at discounted prices. So, while the market may seem uncertain, while the headlines may be alarming, Buffett's actions remind us to stay focused on what truly matters: value, patience, and a long-term vision. But those index funds, that's the part that really throws people off. Buffett, the index fund advocate, selling them off. What's the message there? Maybe he's seeing risks in the broader market, things that make him hesitant to hold those funds right now. Or maybe it's a tactical move, a way to free up capital for other opportunities. Now, before we move on, if you're liking this, please like and subscribe. It helps me out. Any questions? Comments are open. Okay, so even Buffett, the Oracle of Omaha, shouldn't be blindly copied. Figure out what makes sense for you, your goals, your risk tolerance, your own unique circumstances. Instead of trying to decipher Buffett's every move, maybe the real takeaway is to focus on the timeless principles of investing: patience, discipline, not getting caught up in the hype. It's like planting a tree. You don't expect it to grow into a giant oak overnight. You nurture it, give it time, let it grow. Investing is the same way. Slow and steady wins the race. It's about building wealth over time, not chasing quick riches. And that brings us to another of Buffett's famous sayings: invest in what you understand. It's not about becoming a financial expert overnight. It's about taking the time to learn. Do your homework. Read company reports. Look at their financials. See how they make money. Who are their competitors? Does their business model make sense to you? Do you believe in what they're doing? Don't just buy something because it's the hot stock of the moment or because someone on social media told you to. Make sure it aligns with your goals, your risk tolerance. Be honest with yourself about what you know and what you don't. Don't get in over your head. If something seems too complicated, too risky, move on. Plenty of other fish in the sea. So, understanding the business is crucial. But what else can we learn from Buffett? Another key principle: buying companies at fair prices. He's not just chasing bargains, he's looking for companies with a real competitive edge, strong management teams, a history of making money. He's willing to pay a fair price if the quality is there, because in the long run, those companies are more likely to deliver. It's easy to get lost in the details, especially with someone like Buffett. But even he doesn't have all the answers. He doesn't have a crystal ball. He's made amazing calls, but he's also made mistakes. No one can predict the market perfectly. It's about building a solid foundation, a good plan, and sticking to it. One thing Buffett really emphasizes is patience. He's not about those quick profits. He's in it for the long haul, playing the long game, building wealth over time. Like the tortoise, slow and steady wins the race. And that ties into another key point. Don't get swept up in the noise. The headlines, social media, it's everywhere. The market goes up, the market goes down. It can drive you crazy if you let it. It's like drinking from a fire hose. Too much information. Tune it out. Focus on the fundamentals, have a plan, and stick to it, even when things get bumpy. Like having an inner compass that guides you, keeps you on track, no matter what's happening around you. And remember, even if the market takes a dip, it's not the end of the world. It's happened before. It always bounces back. What goes down must come up eventually. One of his best: be fearful when others are greedy, and greedy when others are fearful. It's about thinking differently, going against the crowd, not following the herd. When everyone's selling, maybe that's the time to start buying. If you've done your research, you believe in the company, you see value where others don't. It takes courage to go against the grain, but sometimes that's where the biggest rewards are. Buffett built his fortune that way. He's not afraid to be different, to see opportunity when everyone else is panicking. It's inspiring. It shows that even when things are uncertain, there are possibilities out there. There always are, and that's what makes investing so exciting. We're not saying we have all the answers. We're just trying to learn from the best, sharing what we know, and hopefully empowering you to make the best decisions for you. It's something to think about. Remember, this is a journey, not a destination. There's always something new to learn, new challenges, new opportunities. That's what keeps it interesting. I hope you enjoyed the video. If you did, please like and subscribe. It really helps me out. And if you have any questions, I'd love to hear from you in the comments.